Well, good afternoon, ladies and gentlemen. I'm Maurice Jackson. I'm the founder of Proven and Probable. Welcome to Strata Holdings. I had an opportunity to review the company yesterday, and as a shareholder, what I really enjoyed about the value proposition is the leverage of the business and the geological acumen for a prospective shareholder. And here to share more about the value proposition, we have the CEO with us, Mr. Michael McNeely. Sir?
Thank you, Maurice. Really appreciate it. Thank you, gentlemen, and ladies and gentlemen, thank you for your time. I'm the CEO of Strata Investment Holdings. Also with us in the room, you have the chairman and the CFO. We're at the booth number 14, so please feel free to stop by if you have any questions after the presentation. So just a quick disclaimer, which we have to have in there, but just to give a very brief overview, we've got sort of 6 real reasons why I think we're a very interesting value proposition, but I'm going to bring your attention immediately to the royalty holdings, which is what we're going to cover a lot of. We are an investment company, so we have an NTA, which is about 43 million Aussie currently, and we trade at a substantial discount to that. We have several high conviction investments, of which Cobre will come and cover a lot of, which is in the Kalahari Copper Belt. And then finally, we have this complementary investment strategy, which I'll come to. We have a very experienced team of professionals. Just in terms of the share price, we're currently a little lower than that at 18 cents today. And you see the directors and management. You can see Rick there. He has a personal holding, and then also he manages about 8.26% of the company through Strata Asset Management, which is his legacy grandfather portfolio. And then Mike Joseph is an ultra high net worth, and then board and management has about 4% between them. So just quickly, I want to draw your attention. Obviously, you can meet Charles and you can meet Adrian in the audience. In terms of our technical expertise, we have a full-time technical investment director, 20 plus years of experience. He's a former concentrates trader as well. And David Royal, who has been described by Rick Rule himself as a bit of a superstar, 40 plus years of experience in the sector, and he reviews a lot of our investment decisions, and in particular from an earlier stage point of view. And finally, what will be quite relevant perhaps, we have David Wargo, who is the head of investment banking for SCP Resource Finance. They're at the booth on the right as you come into the conference, so please take the opportunity to go speak with him about why he's a member of our team. They recently led a management buyout from Sprott, where they were the Sprott capital team before that. So in terms of our investment strategy, we have our equity investment portfolio, we have our copper royalty interests, and we have this buy and build strategy that we're working on that we've disclosed that we're very actively working on. And finally, we have these legacy active equity investments, of which Cobre is perhaps our most high conviction out of the 3. And just to give a bit of context to what an active equity investment is, we usually take an over 10% stake. We take a long-term view. As a British public company, if you hold an investment with over 10% for 12 months, there's no tax on exit. So it is a bit of a private equity strategy, but obviously in our sector with long timelines, it can take a while to see early stage things come to fruition. So this is just to give a general overview of where we see corporately as a strategy, the vision for the future. It's quite a complicated slide. I'm not going to dwell on it too much. I'd invite people to have a read of it in their own time. But it gives you an idea of what our buy and build investment roadmap is going to look to be. And what I'll get to is why I think Strata as a platform is something that could go on this kind of journey. So what do we have the most exposure to in terms of commodities currently? In terms of NTA, it's copper exposure. So what I think Rick, if you watch the opening video on us, says is we have a royalty in the company that covers 8,000 square kilometers in the Kalahari Copper Belt in Botswana. His opinion was that it was worth more than the market cap of our company. It's currently held in our books at about $15 million US. and it's only based off of the A4 deposit, which we'll come to. We also have a 2% NSR over Cobre, which currently is not accounted for in our books. We'll get to that in a little bit. So this is our strategic positioning in the Kalahari Copper Belt. I just want to make a few points on Botswana. It's ranked 10th in the Fraser Institute for investment attractiveness for mining investment. And we were involved in the discovery of this mine here, T3. We were the 30% joint venture partners. That was discovered in about 2015, and and 8 years later, it was a producing mine. To give some context, most copper mines, and obviously this is a SED-hosted, smaller open pit, take an average of about 22 years from discovery through to production, if they happen at all. So we own over 22% of Cobre Limited, which is listed on the ASX, and they have these tenements that you can see here, and these are the ones that we have that royalty over. And I want to bring your attention to this. We were selected, or Cobre was selected, to participate in the 2024 BHP Explore program. That is their incubator program. They're in their second iteration of that. You get $500,000 US of free non-dilutive funding, and they bring you in through the program. Really incorporate all of their safety, all of their approaches to mineral discovery, and they're interested in that because we sit here on the basin margins of the Kalahari Copper Belt. We are also leading active and passive seismic at their recommendation for the first time ever, so we're pioneering that in the belt. And then with the holders of this tenement, these tenements here, Sandfire, we've also had airborne gradient gravity surveys. So what you're looking for are these large potential tier 1 copper discoveries undercover, and we'll be the first to apply that style of geophysics to it. So that's a real blue sky for us in terms of both potential private equity exit and also the potential value of that NSR. So we have this A4 one, which is going into production, and it's uncapped over this entire area here with Sandfire, but of interest is this area here. T3 is already in production, A4 goes into production in September, and A1 is a recently announced satellite discovery as well. And then finally, this area here in blue at Zone 5, that was acquired by MMG, a Chinese state-owned enterprise, for $1.85 billion US just recently. So I think I've covered some of the points, but I want to zoom in on why I think the royalty's worth more than what we've currently got it in our books at. So A4 here, you have a maiden resource estimate of 9.8 million tons at 1.4% copper, so 134,000 tons of copper. We actually account for it on the ore reserve because that's the sensible thing to do, and that's only 114,000 tons of contained copper. Sandfire recently announced that they're 29 holes into testing dip and strike extensions, and that they anticipate being able to add an additional 1 year of mine life, potentially 2 years of mine life from that extensional drilling. A4 is 5.2 million ton per annum capacity, doing about, at its peak, it'll do about 50,000 tons per annum. They're currently running it over capacity most months at about 6 million tons per annum. So they're really getting through that ore, which bodes well for the high-grade stuff at A4. And at A1, they just announced in April 5.6 million tons at 1.3% copper and 10 grams a ton silver. And they've said that they're going to put a lot more drill holes into that to prove it up. And we think there's potential for that to expand. And we haven't accounted for that at all in the value of the company. This probably has about an 8 to 8.5 year mine life remaining currently, including what's been reported at A4 to date. Of course, it is SED-hosted, and you can see all of the targets that Sandfire has mentioned, which are all within a 20 or 10 kilometer square kilometer radius of the plant. So we expect them to get very busy on exploration, so lots of upside. So the royalty timeline, just to go through a few things, we're expecting our first royalty payment in next year, in the first half of the year, hopefully a lot sooner. There's always a bit of a ramp up thing, and when they say they go into production, they might end up stockpiling. It really depends on how they're actually processing things and mining at T3. We don't have the detailed mine plan. We only can go based off of what we know in the public domain. So I've been quite conservative there. but at very least first ore will be in Q3 of this year. And then BHP discussions on Kit West, or in particular Cobre, we're very confident that they will go well because the program has ended. In terms of our core equity investment portfolio, this is an example where we strip out the actives that I mentioned earlier, and the royalties as well as cash, just to give you an idea of kind of the rest of our balance sheet. As you can see, we have a lot more diverse exposure when you strip out the royalty, but we do tend to be quite focused in terms of the smaller end of the sector, so looking for earlier stage, high torque opportunities. We had a pretty bad start to the year in terms of what our trading book is, which again, we take out the value of the royalty, we take out the value of the actives, we take out the value of a few other things, and we started picking back up in April and in May, and so things are looking a little bit better in terms of our running NAV, but we try to use this as a way to generate cash to cover overheads, but also have some larger bets in the portfolio. So we have a few select high conviction investments, which I'll just run through quickly. Obviously, I've already touched on Cobre Limited, but I just want to touch on it a little bit more because I think it's like a chessboard where all the chess pieces are almost in check, and we just need to figure out how to get to checkmate with one of the several parties in the belt. So MMG, they haven't moved into Botswana for a short-term vision. They're there with a 60 to 80-year view. And in fact, Cobre, when they did their last fundraise, had a lot of interest from certain parties that were over or across or working on the acquisition of the private equity-owned Cooper Canyon. Sandfire, mid-tier copper producer, 4.2 billion Aussie market cap, have publicly stated that they're committed to the belt. They executed the T3 build on time and largely on budget through COVID. Excellent operators. And then obviously there are several other parties that are having a look at the belt, and then you have BHP Explore. And I think something really interesting to note on BHP Explore is they have their own decision-making abilities. They do not need to push things up to the board in order to get an approval to make some sort of investment. Now, why is that important for us? If they did decide to do a farm in, they're looking for a tier one, and if they don't find a tier one, they're still probably going to drill a whole bunch of or discover or spend a whole bunch of money on potential discoveries, other people's money, and we're well covered with our 2% royalty in terms of that adding value. And when you combine that with our royalty that we have here, I think you could start to see some very rapid value accretion. And then finally, as I mentioned, the A4 area, we expect multiple other discoveries to be made here. And I'll touch on this point next, which is the Ngami license. Unfortunately, we don't have a royalty over that one. And that's this section here. And there, they've actually got an exploration target, and they've made some discoveries of an upwards level of 166 million tons at 0.46% copper. And there's a scoping study underway for what's known as an in situ copper recovery method. To give you a comparable, the Florence copper project owned by Taseko is one that is actually fully funded and going into production next year. So it's not just uranium where you get in situ copper in situ leaching. It does exist for copper, and it has worked. You need very, 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 very specific geology in order for it to work. And we've been through a process of trying to de-risk that. So this is our Cobre's Ngami Land copper project, the borehole pump testing. I won't go through this in detail, but I would invite you to have a look at what they've been doing. And we're on the path right now to a scoping study, and we've already de-risked it by proving that we can do injection pumping and then pumping out the water. And this is basically what you'd be looking at in terms of down the track. And it does work because you have two impermeable barriers either side of a highly fractured copper zone with silver, and it's all chalcocite, so it is leachable. So we're on also to met test working now, and there's been a lot of interest from a lot of majors, and I think what's key about this is this would be one of the greenest ways to mine. You'd produce copper cathode directly, very low impact in terms of you're not building a giant pit. And the unique thing about this is also most of, if not all of the resources below the water table, and you can balance the pressure such that you never have any water escaping above ground. And even if it did, it's covered by a very thick calcrete layer, so it wouldn't do anything. It's also not in a part of the Kalahari Copper Belt that has any farmers. It's basically in bushland, and so we know, and when the president came to Africa down under last year, we showed the president of Botswana a video of how this works, and we're in constant, or the team at Cobra are in constant engagement with the government, and we know that they're highly supportive of it. So it's really the holy grail if you can get it work, because it's very low OPEX, very low CAPEX, and very high IRR. Still early stage though, so it is a little bit risky. A little bit left field, it's not hard rock mining. One of our other high conviction plays, Amigo Oil and Gas, which is listed on the ASX. They made a discovery in the Surat Basin in Queensland, 1.73 trillion cubic feet, a 2C contingent resource. They just recently got a tax credit for 6.5 million Aussie back from the government for all of the R&D work that they've been doing, which is amazing because it's really drilling, which is one of the unique things about Australia. And they will be actually drilling a horizontal well probably early next month, in any event in Q3 2024. So it must be next month, and they will hydraulic stimulate that. Why do we like it? It's owned by a company called TriStar that actually pioneered unconventional oil and gas in Australia. They come from Texas, and they've got about 30% of the register. The Flannery family, which we're quite close to, are coal barons out of Australia, and about 85% of the register is held by the top 20. So it's a very, very tightly held stock. And they also have the east coast of Australia is going to have a structural gas shortage coming up in the next few years. So we think we're with the right technical team, and we think we're approaching the right strategy. We will obviously trade out of it if it does re-rate into the speculation, but we will maintain a position. And then high conviction rare earth element companies, I'm sure everybody's met Meteoric, or if you haven't, you certainly should. They came out with a they came out with a scoping study recently, which for me was very encouraging because it showed that they were at the bottom end of the cost curve, which is really what you want when you're sitting at close to 10-year lows for NdPr pricing. But Viridis Minerals, obviously a lot lower market cap, and this has gone down a little bit since. They have 201 million tons at 2,590 ppm TREO with a slightly higher, and this is an inferred resource, magnet rare earth content than MEI. They're in the same area. They're both going to have very large resources. And I think when the rare earths finally turn, in terms of pricing, or the US government or other governments decide that they need to secure critical supply, bottom of the cost curve projects are going to be the way to go. So that's a high conviction one for us. It might be a bit of a difficult journey because it's spot. It doesn't work very well, but ultimately we think prices will recover. And then Resource Strategic Metals, I don't have much time left, but that's one to look at because they actually have a much higher basket size. It remains to be seen from the network if they have true ionic. We do believe from our technical work that they will have at least a very large portion of it as true ionic, but they're also the world's highest grade titanium oxide deposit. So they got the rare earths and the titanium oxide, and it's actually a collapsed volcano, so it's very easy. It's almost like it's free dig essentially. So it should be very, very low OPEX. And it's also backed by some very, very large institutions in Australia, and still is kind of awaiting that retail support, and I expect they'll come out with a resource imminently. So just to cover quickly the investment thesis, our market cap of 33.8 million Aussie, I believe the value of our royalty today, if we were to sell it, which we're not looking to do, would be eclipsed by the value of that royalty. We trade at a discount to NTA, and the royalty value, and certainly the blue sky, and including the A1 portion, which has already been discovered, is not in there. We are actively pursuing a buy and build strategy, which I can go into a little bit more detail at the booth. Multi-commodity, multi-risk exposure, and we think we have one of the more interesting ways in which to get access to the Kalahari Copper Belt because of the diverse exposure. And we're not really too tied to, if we don't make a discovery, you've got that royalty there. So thank you very much for your time, and please feel free to stop by the booth or ask any questions.
Do we have any questions from the audience?
Thank you. How many assets do you have and how much cash? Approximately?
So cash is kind of, our portfolio is liquid, right? So having cash we have cash to make investments, but it's not relevant because we...
Don't have cash yet. So how many assets?
So we have, of the liquid asset portfolio, it's about 22 million Aussie.
Okay. And you have investment company? Thank you. You have investment in company and royalties. So how do you, let's say, how many investment, like 3 royalties?
So we only have the 2 royalties in Botswana, right? And then we have about 30 investments, of which, say, 5 are high conviction and are a lot larger. And of the smaller, say 25 investments, we're in and out of those, trading them.
Okay, and with your royalty, what's your free cash flow, or do you receive money yearly, quarterly, or?
So we would receive money quarterly, and the free cash flow, based on what we valued the royalty at, it depends again on the production profile, and that changes clearly. But over the life of the mine, based on how we've currently forecasted it, it should generate about 18 million over 5 years. Okay. I can show you the production profile. It is bitty. There are years like in 2027 where most of the production comes from A4. So obviously if the copper price is particularly nice or good in 2027, we're going to make a lot more money than what we have forecast. What we use to value our royalty is consensus Bloomberg average pricing going forward, and that data is about 6 months old. Currently, the spot price is above any of the highest years in our model that we've used to value the royalty. And also the silver price is at 24 average for the life of the royalty as well. So a lot of upside, just on the A4 one, yeah. You're welcome. Thank you for the question.
Do you have any further questions? All right, ladies and gentlemen, thank you for joining us here today.